Scomi Engineering has clarified that any talks to hive off its rail division are still at an early stage. Investors piled into its shares today after The Edge Weekly reported that Chinese companies are interested in Scomi Engineering's monorail manufacturing operation. The paper said that these companies may either buy a direct holding in its wholly owned subsidiary Scomi Rail or buy a stake in the listed entity. Scomi Engineering said in a Bursa filing today that while it is continuously exploring opportunities for the growth of businesses within the group, any proposals involving a stake in its rail division are still in preliminary and exploratory stage. Scomi Engineering's shares rose to as high as 44% to 45.5 cents earlier today. It ended trading at 42 cents. LPI Capital saw fourth quarter net profit shrink by 20%. That's mainly due to an absence of a one-off significant gain of nearly 37 million ringgit on disposal of investment in the last corresponding quarter. Bottom line slipped to 81.5 million ringgit, while revenue inched up 5% to 355.6 million. The insurer proposed a quarterly dividend of 55 cents per share. Despite the decline, full-year earnings were up 36% thanks to higher gain from realization of equity investment as well as the solid underwriting performance from its insurance subsidiary Longpac Insurance. Net profit for FY16 was at 437 million ringgit. Revenue grew 7% to almost 1.4 billion. Moving forward, the company's founder and chairman Piow is expecting 2017 to be another challenging year. And with the de-tariffication of motor insurance, he's expecting keener competition in the motor business, which he says may have a detrimental impact on its underwriting performance. PKR VIP Rafizi Ramli warns that Malaysians could be paying RM2.70 per litre for RON 95 come June. The opposition MP says this could happen if the ringgit remains weak and if oil prices rebound. Rafizi says crude oil prices are expected to recover based on several factors. The first is higher US oil output, as American oil majors capitalize on higher crude oil prices after OPEC agreed to cut production. Rafizi also cites Russian Energy Minister Alexander Novak, who is predicting that oil supply will return to normal levels by mid-year. He also highlights the forecasts for oil. The World Bank is looking at crude improving from $55 a barrel this year to $60 in 2018, while the Economist Intelligence Unit similarly expects crude to average $56.50 this year and climb to $60.50 next year. To avoid skyrocketing prices at the pump, Rafizi says the Najib administration needs to introduce a ceiling price of RM2 per litre for RON 95 and reintroduce the subsidy system. Last time RON 95 hit RM2.70 per litre was in June 2008, as crude oil prices surged to over $140 a barrel. Energy services firm Serba Dinamik has reported a net profit of almost 45 million ringgit for its third quarter, ahead of its listing on Bursa this Wednesday. Revenue stood at 511.5 million, a massive chunk of which was made by its operations and maintenance segment. Crude oil prices are still on a slippery road to sustained recovery, but Serba Dinamik is unfazed. It believes its operations won't be significantly affected, as production platforms and operational plants that are currently running will still require maintenance works. Serba Dinamik's impending listing has been touted as the biggest IPO in 19 months. The Shah Alam-based firm intends to raise some 407 million ringgit, the bulk of which will be used to expand its business. It currently services clients in Malaysia, Indonesia, the UAE, Bahrain and the UK. KIP REIT made a quiet debut on Bursa's main market today, opening at RM1.04, 4 cents above its off price. The company is the first REIT to be listed on the CI this year. It raised some 234 million ringgit during its IPO to be used to fund the acquisitions of 6 assets in Johor, Melaka and Selangor. KIP REIT Management CEO Lim Hanggi says the REIT has a lower debt-to-asset ratio at 14.8% compared with the industry's average of 32%. This gives the company the option of undertaking borrowings for future acquisitions. It's already eyeing future assets in Sungai Buloh, Selangor and Kuantan, Pahang. The REIT has seen steady growth in its gross rental income for the past 3 fiscal years. In FY14, the figure reached 48.3 million ringgit. In FY15, it grew to 51.6 million ringgit. And in FY16, it improved to 53 million ringgit. The stock closed 0.5% down at 99.5 cents.